video. So we're gonna be trading XAUUSD today, which is gold, and today is NFP, guys. So I want to just show you guys what is my view on them in the market today. So let's see if we are both on the same page. So let's allow more people to join the live, so we can start the live fully. This is 12:30. So and let's check the news. Let's go to Forest Factory, guys. Forest Factory. So let's look at what the news is doing. Okay, NFP. Is today not NFP? I think this is the first Friday of the week. Today should be NFP if I'm not mistaken. Non-farm payroll, yeah. I'm seeing core, guys. Look at what I'm seeing right here on Forest Factory. This is what I'm seeing right here. So I'm seeing this. Let me extend the screen right here. So today's news. So I'm seeing 130. I'm seeing called PPI. I'm seeing PPI another one. I'm seeing this is 3 p.m. Prelim consumer sentiments and other ones too. So I thought today was NFPO. I thought today was NFP. Am I being mistaken? Yeah. Guys, correct me in the chat if I'm mistaken. I really thought today was NFP. Yeah. Let's search. Let's go online. Today should be NFP now. Why? What's happening? What's today's date? Today's date is, this is the first week of the, sorry guys. Last week was NFP. Yeah. I thought today was NFP. Oh God. Oh God. I should get a stroke. I thought today was NFP, guys. Any forex trader, and but we still have news today. I think, yeah. I think we still have CPI news today. It's still a reasonable news to trade on. So let me show you guys my charts. Let me show you guys what I'm looking at on the charts. Any forex trader on the live, anybody that trades forex on the live should say hi. Share the live stream, so more people could join. I think I have to, God of mercy, I was honestly thinking today was NFP. Yes, let's trade together. Trading the same pairs. Okay, world famous Ben. Yeah. You're also trading gold. That's good. How is gold treating you? You have to be careful trading gold, because gold is a very, very crazy pair. You enter a trade late, you see one huge white stop loss. That's one thing about gold. It can take your money fast, and it can also give you money fast. It's very, very, very volatile. Yeah, very, very. Like if you're trading a pair like GBPUSD, if you enter a 15-minute candle entry, it might just be giving you a 20 pips stop loss. But if you enter that same candle on gold, you might be seeing 80 pips stop loss with just a 15-minute candle. 80 pips. But it's a good pair if you know how to trade it. It's a very, very good pair. It's a pair whereby it requires you to be very, very patient about it, and just know where to plot and place your entry. But if you get it wrong, man, you get your ass whooped. So guys, let me show you guys what I'm looking at on the chart right now. Let me show you guys my screen. Let me show you guys what I'm looking at. So this is my chart right here. This is my 1 hour chart. I only trade 1 hour charts. Let me extend this my screen right here. I only trade the 1 hour chart. No, it's too big. Yeah, I think we're good to go like this. So this is my view. This is my view on gold. So we had a break of structure somewhere around here. Let me go to my 4 hour chart, 4 hour time frame. I think we'll see more. Let me go to my 4 hour time frame. So it will be more. So we had a break of structure here, guys. This is a break of structure. This is the previous high, and market has been very, very bullish. Very, 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 very bullish. And one thing I love about gold is that gold respects imbalance. Like whenever you are trading gold, you respect imbalance. You respect imbalance. Like that's what I love about gold. So this is a very nice imbalance right here, guys. I want you guys to pay attention. Let me give you guys these tips. This is my setup. I'm looking for a buy, but I'm looking for the CPI news to push the sellers to push the news to push the sellers to this point. This is an imbalance right here. This is a bullish candle and it created this nice imbalance. There's liquidity built up here. Let's go to the. So there's liquidity built up here at this 4 hour. This is my zone right here. There's liquidity built up here. So let's go to the 15-minute time frame so I can show you guys. So let me go to my 15-minute time frame. So there is liquidity built up here, guys. So this is liquidity built up here, and this is also liquidity built up here. So there's enough reason why market will reverse from here, because when this liquidity has been swept, there's a high chance the market is going to reverse to the upside. So I think that's just it. So I'm expecting the news to push aggressively to this zone, and we tap from. And guys, one thing I'll also add to this trade is that regardless of if the market gets to this area, there is something I use in my trade. There's something I use to confirm my entries. There's something I use to confirm my entries, which is New York session. And let me show you guys what I use to confirm my entry. Let me show you guys the confluence I use to confirm my entry whenever I see my setup. So let me show you guys this trade right here. So let me show you guys this trade. There is a trade I haven't traded this week. This week has been a very, very slow week. Yeah. No, this is not it. Okay. Yeah, this is it. I'm coming. Is this the trade? No. I'm coming. You guys share the live stream so more people can join. So this is the setup, guys. This setup is the setup I trade. So first, let me show you guys how I basically trade. I've made a lot of videos about my setup. Let me show you guys how I basically trade. This is my ultimate setup. Like whenever I see this setup, I don't joke. And if you notice this setup I'm trading, what I want to trade on gold, this is the same thing that I'm seeing, but there's still some things I need to add to it. So whenever I see a break of structure, this is like a change of character. This is not a fully break of structure. Let me extend this chart so everybody can see what I'm talking about. So right here, this is like a change of character, which is showing that market wants to push to the upside, but it is still a little bit nice break of structure, a little bit, not too much. Then what happened? Market pushed to the downside. This is an imbalance. This is the imbalance market created. So what I love gold is that gold respects imbalance a lot. Markets give me this bullish engulfing, created this imbalance at this area. And how do I mark my imbalance zone? I mark from the first candle that this is the candle that was formed before the breakout. So I marked from the high of this candle, like from the high of this candle to this low here, right here. So when I marked it, then I expect market to create liquidity around my zone, which is market created here. Then whenever New York session has opened, which is this great this in I use guys, make sure you're also using this indicator right here. This indicator is called simple session. This indicator is simple session. Okay, this is how I mark out my imbalance. So let me show you guys. Let me show famous Ben. Okay, let me show you guys how I mark my imbalance. So whenever I see a break of structure, so which is looking for the last high or the last low before the break of structure. So this is the high that market took out. So the candle that created the break of structure, which is this candle right here, then I mark the high, the wick of the candle, which is this area. I look for a space. So like the imbalance means like is a gap that the markets refuse to fill before it continues to push. Like you are expecting market to retest that area, but market did not. It just kept pushing up. That is imbalance. So why I love gold is that gold respects imbalance a lot. That is why I love trading gold. There is a 60% to 70% chance that gold will come to retest that zone. So this is the imbalance created here. This is it. I marked from this. So I look for 3 candles. So this is the first candle, this is the second candle, this is the third candle. So the second candle is the candle that will be creating the imbalance. So it created it here. So I mark from the wick of the first candle to the low of the third candle. Are you saying the wick of the first candle to the low of the third candle? Then what did I do next? I allow market to push to that area, which is creating liquidity around the zone I want to trade, which is this low right here is liquidity. This area right here is also liquidity. Then what happened? There is something I look for here, like an fair value gap. Yeah, you can call it fair value gap. May I just call it imbalance? If you want to call it fair value gap, it's still the same thing regardless. The most important is it doing what you want it to do. That's the most important. So what I use to confirm the entry that okay, I know that there's a higher chance it's going to go in my direction is that whenever I see that market has created an imbalance, I have marked my zone, it has built up liquidity. Like so, this is the first thing. I see a break of structure number 1. I mark out my imbalance number 2. I allow market to create liquidity number 3. Then whenever New York session opens, I look for the last low market created before New York opening, which is this candle. So there is an error here. There is an error in this indicator. So basically, it used to be around 2 p.m. So, but now I think there's some changes on the indicator. So it is giving me like 1 a.m. So, but what I just want to explain is that I take my trade exactly 2 p.m. Guys, listen. I take the trade exactly 2 p.m. When it is 2 p.m. or 1 p.m., I start looking for my entry. 2 p.m. or 1 p.m. So what I basically look for is that I look for the low. So this is like, are you seeing this, guy? This is the line. This is the last London candle. This is another New York candle. So guys, I had a network interruption. So as I was explaining, so oh god, what's happening? So as I was saying, one thing I basically look for is that, yeah, my network is breaking. Yeah, I'm having a bad network. So as I was saying, one thing I basically let me go back to that trade. There's something I still want to explain on that trade, because that setup I'm trading, that setup is like one of my best setup. One of my best setup. I when I see that setup, I don't joke with it. Like whenever I see that setup, and let me show you other analogy right here. So this is another trade I took. So what happened right here is that it is a very, very straightforward stuff. So what happened right here? What happened right here? Market gave me a breakout structure Market gave me a break. It took out this, I broke of structure. Then what happened? Market created, this is liquidity right here. Market opened. This is the last London low. This is the last London candle. This is another candle. Then market pushed when New York guys open. Okay, I'll continue from there. Just hold on a bit. So when New York opened, market pushed to the low side, to the downside, then took out this London low right here. So let me give you guys a very very simple analogy, but the concept comes in different ways. So it might be very very hard to explain in every setup. It sometimes it doesn't really look like the perfect one, but it takes experience to like spot that okay, this is still the same setup, but it is just coming in a different way. It's like you seeing a hammer candle and an engulfing candle and thinking that okay, a hammer candle also stand for a hammer bullish candle also stand for market is ready to push to the upside, and an engulfing candle also stand for market is ready to push to the upside, but it's a different form, but it has only one meaning. So that is just how this setup is. This setup I'm explaining here is. So I want to go back to that trade. Yeah, let's go back to that trade. That trade is a very very simple and straightforward stuff. So guys, just stay with me. What I'm saying is that what I'm explaining is that firstly, I look for my break of structure. Let me go back to the beginning. I look for my break of structure. I mark out my imbalance. Then when I allow market to create liquidity around my zone. When I'm seeing that, then I wait for New York opening. I allow market to sweep liquidity, like to sweep the liquidity built around my zone. Around my zone, market has this is the liquidity here. This is another liquidity here. Market swept it, took out this low, took out this is the first imbalance. This is the first candle before the break of structure. This is the second. This is the third one. So this is the low. This is the high. This is the high of the candle. This is the low of the candle. Market took out this low right here. So if you would look on the 15-minute candle, on the 15-minute time frame, you'll be seeing a nice change of character. Then when I start seeing this rejection, I just enter. But you can also use like a 15-minute or the 5-minute candle to just know that, see some change of character on the smaller time frame to know that okay, now market wants to push to the opposite side. If you would love to see the, but regardless, it has a very higher chance of going to the direction. So this is just the same analogy I'm using for this trade right here. This is a live trade that have not been executed yet, so it is more easier to use this live trade right here. So stay tuned on the channel. I'll be giving you guys an update on this trade on Sunday. So this is just it, guys. I've seen a break of structure, which is this. This is the imbalance right here. This bullish. This is the first candle. This is the first candle right here. This is second candle. This is another candle. So I marked out this week. I marked out this high right here to this week, which is this is the imbalance at the middle. So I am expecting the market to push to this downside, clear out this low right here, just tap into this zone, push into this zone. I'm seeing the rejection. If I want to wait for a confirmation, which is like the 15-minute confirmation, 5 minutes or 15-minute confirmation, it is still okay. But if you don't also want to wait, just enter the trade. Maybe you can just reduce your lot size. Maybe when you see those lower time frame candles start forming, then you start scaling it into the trade. But this trade has a very high potential. So this is the analogy once again. Break of structure. After the break of structure, I mark my imbalance. This is my imbalance right here. I allow market to build liquidity. This is liquidity here. This is liquidity here. Market has built liquidity. So when market has built liquidity, there is a higher chance if market sweeps the liquidity, it's going to go to the opposite direction. So I'm just expecting market to push to this zone, tap into my zone, then I buy. I do my 1:2. I am out of the market. So this is the analogy for this setup. This is what I'm looking out for gold now. So and it is I was thinking today was NFP. And I was mistaken. So I think I need to do my confirmations right before I make some claims. So I think that's my bad on my own side. So I was thinking today was NFP, but there is still news today. There's still CPI news today, which is let's go to the first factory, we are still having this news right here, and it is a strong news. So let's see. This is the news right here. This is the news right here. So we are having core PPI, core PPI premium UOM consumer sentiment. So that's just it. So let's view it. Let's see what is going on that. So let's see what's going on that. I think it's not showing. It's not showing. So let's just wait. Let's see what's gonna happen on XUSD gold. Let's see what's gonna happen. So you guys should share the live video. Share the live video so more people can join the live. So you can benefit one or two. And are you seeing this candle right here? It's pushing to this is an engulfing candle right here. Are you seeing it? Has taken out this high. This there is a higher chance market is gonna come to this zone. So this is like my Q zone right here. This is my Q zone. Whenever, guys, just do the analysis right. Do the analysis yourself. Do the analysis yourself and confirm this. If market gets to this area, there is a higher chance. If market doesn't at least give you close to 100 pips from this zone, I'm not saying the market will come here, but market gets to this area, it will give you nothing less than 100 pips. Nothing less than 100 pips will come out from this zone. So let's plot our let's see right here. Then when I enter, I do 1:2. I'm not being greedy about my trades. I do when I enter here. So if I'm able to enter the trade here, my stop loss will be around 100 pips. Yeah, it's too much. It's too much. Yeah, okay. No. This is not it. Let me go to my 15-minute time frame. This is too wide. Let's go to our 15-minute time frame. So when I enter the trade here, somewhere around here, are you seeing it? Market is pushing down nicely. So let's take a buy from here. So when I enter it here, then what are we looking at? We are looking at market at least. Are you seeing? See why gold is very crazy. So just because of this news, that is why the stop loss is that is why it's giving me like 100 pips. Due to whenever there is news like this, everywhere it just goes crazy. So I'm entering my trade here. Market gives me 1:2. Market gives me 1:2. I am in. So I will advise you all to wait for a change of character, which is like a 15-minute change of character. After this low has been taken out, look at your 15-minute time frame. Check out this low right here. If it has been taken out, just wait for your 15-minute candle change of character or your 5-minute candle change of character. It will give you a way to place your stop loss. Because if you are just entering a trade here and without waiting for a change of character, you might not know where the market might want to still push. The market might still want to push to the downside, and you might get stopped out in the middle of that. So in order to avoid that, just allow market to give you a change of character. If it gives you a change of character here, it won't reverse and take out that low again. So it won't reverse and take out that low. It is not possible. Just let's do this. Let's use this as an example. This is a liquidity here. Market swept out this low. Market gave us this hammer candle right here. Then you take a trade from here. You will have more better advantage to take a trade after this candle has closed than taking a trade before the candle closed, because maybe you took the entry. Maybe you took the entry here, and market still wants to push it down. If it pushes the downside against you, you just get stopped out from it. But if you are able to wait for this 15-minute change of character, have you seen it right here? You will have more view on where to place your stop loss, which is, let's see this one right here. Now this is a nice one. Then you are placing your stop loss just below this 70 pips. 70 pips. Do your one. Don't be greedy, guys. Do your 1:2. Get out of the market as soon as you can. Take your profit here. 1:3.1. It is okay. You looking for all these ones? It's just like you can hold your trade to this area, but just leave like the lowest position you could leave, and just leave that and just let it run. But your most realistic profit, take it out here. You are out of the market. You go do other stuff instead of looking for what is not there. Are you seeing it? You are risking 70 pips to make about 170 pips. It makes sense. It makes a lot of sense. You are risking 70 pips to make like 170 pips. What more could you ask for than this? You are looking for 1,000 people. That is unrealistic. That is like unrealistic profit. And if you take 10 of this kind of trade, looking for unrealistic trade profit, there's a higher chance you get stopped out 9 times before you see a winning trade. And how can you mentally hold that kind of loss? Because your trade is going into profit, you are losing it back to the market, you are losing your profit, you are also losing your capital before you are able to secure one single trade. It is not reasonable. So make sure you are realistic with your approach in the market. Take out your profit 1 to 2. It is reasonable here. Take it out and you are off the market. Take it out. That's all. It doesn't really have to be 1,000. Guys, don't mind all those people that post on the channel. I've made all these things, all these unrealistic profit people post online are just a way to just attract you. There is there are not much people that does people I can trust that does this kind of trade are people like, I don't know if you know Nick Nick trader Nick. Yeah, people I know that, okay, these guys are like investors when it comes to trading. They hold trades to more higher, and these guys are guys whereby they just risk a certain portion. They are like investors. So this guy is a guy whereby maybe he puts $1,000 on a trade or $2,000 on a trade. Okay, he has a potential that, okay, he wants to wait for maybe 2-3 weeks for the trades to run. It is reasonable, but you as a day trader doesn't need all these things. You have gotten your 100 pips, you have gotten your 200 pips, you are out. God can give you 100 pips. So how long does this trade took to run? Let's calculate it. This is the first candle. Now this is the first candle you enter. This is 15 minute candle. This is 30 minutes. This is 45 minutes. This is 1 hour. This is 1 hour. So market used 1 hour to push from here back to this area, back to your entry. Then it used another 1 hour to hit your take. Or it's not even up to 1 hour. This is 15 minutes right here. This is 15 minutes right here. 15 minutes, 30 minutes. 15. You use 45 minutes to hit your TP. You are out of the market. Let's just say market used 2 hours to hit your take profits. You entered here, you exited here. 2 hours. You are out of the market. It is realistic, it is reasonable. Like 2 hours, you're out of the market. What are you looking for unrealistic profit for? You just be stressing yourself. I don't know. There is no any reasonable. There's no any reasonable ideology on that. So, but guys, I'm kind of skeptical on this trade because from here to this area is a lot. It's a lot. From this area to this area, it's a long way, guys. From this area to this area, it's a long way. So, I don't know if market might want to come to this area. So, and if I'm gonna look at it, we are having how many pips distance? Let's measure it. From here to where we want to trade, we are having how many pips distance? We are having about 590 pips distance. So there is a higher chance market might not come to that area. Market might just do this. It might just come to this area right here. It might come and take out this low. Maybe test this high right here. Take out this low, test this high, because from here to here is a long way. From here to here is a long way, guys. So market might come and take out this low, test this area, then reverse. Then maybe on Monday or on Tuesday, it might come and test this area. So I think that's just it. Prices might come here, but it's too far. It's too far. It's the distance from here. So I think market might do more of a sell-off. So guys, are you seeing it now? It is now New York session. It is 1 p.m. So are you seeing it? This is New York session right here. So let's go to my 1 hour chart. Let's go to our 1 hour chart right here. So what are we looking at right here? So this is New York session right here. So the idea is for market to push to this zone, but it is too far. But there is nothing this market cannot do. Market can go 1,000 pips in a matter of seconds or minutes. It has happened. So there's nothing that it is not impossible. But if we're gonna look it from a realistic point of view, it might not come to this zone. But regardless, we are still having a good, nice kill zone here and a good nice setup here. So I might be ending this live stream soon and just focus on my own chart and just look out for what I want to trade. So, and there's also one more thing, guys, before I leave. Let me give you guys a quick tip. If the market eventually takes out this high right here, just taking out this high, it might not come and take out. If the market takes out this week right here, let me go back to my 15-minute chart. Let me show you guys. And you are seeing, so let's place out this zone. Let me give you guys a quick tip, because if I might sell if I see something that is more valuable than what I'm looking at right now. So this is it right here. So this is my zone right here. This is my zone. Let me mark on my zone. This is my zone. This is my order block right here, my 15-minute order block. So this is liquidity built up here. This is liquidity built up here. Market might push to this area. If it push to this area, it taps into this zone, it holds this zone, it doesn't break above this area, and you are seeing a change of character, which is like a hammer or a bullish engulfing candle. You might want to sell from here, and you just aim for this area. Aim for this. Just do your 1:2 regardless of where the market might want to go to. It doesn't really concern you. Just do your 1:2. If you are able to enter a trade here, maybe you saw a nice change of character here. Maybe you are able to take a nice change of character here. Just do your 1:2. Let's just assume you entered here. Just maybe you put your stop loss above here, above this area right here. Then you do your 1:2, which is somewhere. Just aim for this low, this week right here, or this area. Regardless, it is still okay, or anywhere around this area, it is still fine. So that's just it. You might want to sell here. This is another analogy. Let me go to my 1-hour chart. So you might want to sell here. After market takes out this high, you go to your 15-minute chart. You look for your change of character. You sell. If you are seeing something like an hammer or a bullish engulfing candle at your 15-minute chart, I will advise you to sell. I will give you do your own analysis. I'm just giving you my own opinion. Do your own analysis. I'm not saying this is what is going to happen. I'm not the one controlling this market. I'm just doing it based on my own experience and what I feel market might want to do. So that's just it. So I think I'll be signing out for now, and I wish you guys a great trading day, and I'll see you guys in my next live video. So stay tuned, guys. Stay tuned. So let's end the live video right here. So stay tuned, guys. Stay tuned, and